building wealth and legacies. Ooh, we, it's bigger than me. Ooh, we, building the kingdom. Ooh, we, now I'm free. Freedom ain't found in money. Freedom is found in grace. That's why I keep my faith in God and not that money I made.
What's going on, y'all? This B. Weddles, and I'm here to bring our 1.1 Forex Mentors Reloaded. We're going to look at the charts. Like I said, our first one was Jay Wayne, and so what we're going to do is use our principles. And one principle that I learned from him was the power of the trend line, and how to take the power of the trend line and refine it to the lower time frames to find powerful setups every single day. And so what we're going to do is just go over this principle, and I hope you enjoy this. Like, subscribe, because we got powerful content that I'm going to bring to y'all, man, from everything that I learned from everybody that has poured into me. I want to give it, man. I want to give it all away, man, to make you the best trader that you could possibly be. This is my personal vlog, so I pray that you enjoy this. And we're going to have all type of things on here, man, to mindset, to charts, to, you know what I'm saying, just regular everyday life, you know. So here we go. The power of the trend line. Let's go to our weekly chart. The reason why I go to the weekly chart is because I like the weekly chart. Particularly, Jay starts with the daily chart. I just like the weekly chart. And so that's one thing that you will learn is as you go and serve under people and learn under people, you know, you start to come to your own personality, and you'll find what you like and what you don't like, and it's about refining it to who you are. You know what I'm saying? And what makes you confident as a trader. So the power of the trend line is this. When you have a trend line, you got a higher high, low, higher high, low. Okay? And then higher high, right? So you got, particularly when you have a trend line, you have, you know, multiple data points. Now, when you have a trend line, like, okay, you got 3 data points. When you have 3 data points, you can draw a trend line, right? So you need at least 3 data points to even consider a trend line, And this is just our example. And then what you want to do is pay attention to the lower lows. This is Dow theory, higher high, higher low, right? This lower low, higher high, lower low. So it's a higher low. And so with that, what we have is we want to pay attention to the lower lows and the higher lows that actually to produce higher highs. Because what we want to do is you want to see the actual structure of the market and where the order flow is going. Because if price is not making higher highs and if price is making equal lows, it kind of gives us an idea of where the momentum and where price is going at that time. And so what trend lines do is actually they help you frame up the structure of the order flow that's happening in the market. Because particularly, you know, we look at price, and so when you look at price, all you doing is seeing orders being filled, and as orders being filled, it kind of lets you know, okay, where the central banks is trying to take the money, where the major institutions and the fund managers, where their money may be lying, and it's why we don't know why a person might want to sell at 1.80. We don't know why, but we need to know. We have to be aware that these orders are being filled on that level. And when you look at the higher time frame, you see orders being filled at a particular level, and you see price moving from those areas at a strong pace. That's even a stronger indication, because how can a retail trader move a price from here to here on a weekly basis? This was a weekly drop. How can a retail trader do that? That means these are strong orders that's being set at this price. And so that's stuff to pay attention to. But the power of the trend line is this. We want to frame up the structure to kind of give us the idea of the order flow and what we should be looking at as far as momentum wise. And so let's see what we can do here on Euro NZD, and we take the swing low, right? And we're going to take that. Why did I take this? Because the price came up, made a lower low here. This is the actual lower low. This is the lowest data point within this first impulse move. And so we have a lower low, but the thing is, this lower low did not create a higher high. It went into consolidation. This lower low kept the higher, became the low that created the high. And so this zone, this low is more important, and it gives us an indication, okay, if price is to respect, it's going to respect from this area, because this area actually created a new structure in the market. And so here we see on the weekly, prices actually broke this zone and came back and retested and pushing down. It's pushing down. And so, and then we have another a pattern, almost like a wedge pattern here. You see that? And then that low created a new low here. So, and then we have an inner trend line here, because that low created a lower low here. But this low did not come and actually even test this structural level here, but it came and made a lower low here. So we have an outer trend line and an inner trend line, and when this inner trend line is broken, a lot of times what happens is price comes and tests the outer trend line. So we have multiple data points. We have our uptrend, and then we have a downtrend. And actually, you can even go so far as, you got so many data points on this, you can even go so far as saying, oh man, I got a flag, or I got a wedge, or I got something very particular on this level. But I'm not gonna go that far. I'm gonna keep it, pretty much like where it's at, and so because the power of the trend line, it gives us where the order flow and the structure of the market is going. And you take these higher time frames and you start to refine them, you have very powerful zones to take daily setups or 4-hour setups, or I call them intraday swings, where you can get in on the 4-hour and ride it for 2 or 3 days and close it out, because you got in on the right time, the right day, and the right data point. And so as we got these zones right here, is price making a lower low. Look at that. So we got, and it's respecting it, and then hit the inner trend line 3 times. And one of the rules to trend lines is 1, 2, 3 and break. I don't really, it can hit it 1, 2, 3 times to continue going in the direction that it was going. So you trying to put rules around it, it's good. I think one thing to keep in mind is the reason why people say that is because, particularly when you think about an Elliott wave theory, you got zero, the first impulse, the retracement, which is your 2 leg, the third, then you got the third impulse, and then the retracement, which is your 4th leg, and then your 5th impulse, right? And so with that, you have 3 impulses, and so, but you have 2 retracements, your leg 2 and your leg 4, and I can pull it out so you can see it. See, your leg 2 and your leg 4. So leg 2 and leg 4 are the data points, and you got 0, which is another data point. 0, 2, and 4 is your data point. So when you have that 5th leg and it pushes back down, a lot of times you will see that you'll go into a complex retracement, and that complex retracement a lot of times breaks that original structural level, and it could be the end of a trend, particularly when you think about wave theory. And so we have some great framework here, and I just really want to just say, okay, when you have these lines up, it can get messy, it can get confusing. So you can take lines off and just say, okay, what lines do I need right now? What do I need right now? What's more important right now? Like, I like this higher time frame uptrend because it kind of gives me an idea where price can go up in this area. If price breaks this inner trend line, okay, I'm like, wow, if it touched this trend line, and then it's more information on this chart that can give you an edge on, okay, if it does break this inner trend line, where is price reaching? And that's another thing that we have to think, where is price reaching for? And we really never know, so we have to use zones and see if price breaks these zones and retest these zones, because we really never know until the zone is broke. We never know until price is broke, until a price zone is broke. And so when we got this all set up where it needs to be, and so when we come down to like the 4-hour or the 1 hour, the 15-minute, now we can start setting up, okay, if it breaks this trend line, where do I want to pay attention to if it breaks this trend line? Well, particularly if it breaks this trend line, I want to see price break the trend line, but I wanted to come up, and I wanted to come up there, you know. I wanted to come up there. So if it breaks that trend line, I want to see a retest in that zone. If I get a retest there and price continue to the upside, I'm there. I'm ready for that. I'm ready for that trade. And also I can take that trade because it's space between these zones. It's space in this area. You know, and you know, if I'm just taking an intraday trade, this, you know, that's 15 pips, 20 pips, 30 pips, 50 pips. If I hold it, that's 300 pips. You know what I'm saying? If I hold it and I know, okay, price broke the inner trend line, it's a good possibility it's going to test the outer trend line, then I got room to keep that trade running. Or I can take this high probability intraday setup and know that this zone, this inner trend line is powerful. It came from the 4-hour chart. So when this is actually broken and I see momentum closing and I see a big green bar close above this and it comes back down and retests this area, then I know that I'm in for the making. And so that's the power of a trend line, guys. I mean, this is some powerful stuff. It's key things to take away from this teaching is that we want to make sure that when we draw in our trend line, that we take when we take the swing low, we take that beginning point, we want to make sure that when we use it as a table, and when we use it as a table, what happens is you can it kind of simplifies what data points you should make important. And then once you find a data point, you want to make sure that data point is actually important to structure. And how do you know if it's important to structure? Because that swing high or swing low makes a lower low, or it creates the higher high within price, in which okay, it refines the idea of, okay, this is an area in actually where major buying and selling took place that actually broke structure and made a higher high, or broke structure and made a lower low. This is a key area that I need to pay attention to, which makes your trend line more powerful. And then the third principle is refining it, understanding, okay, I want to refine it. I don't want to go too low. Let's go down to the 4-hour and see what kind of data that we actually can get. And then once you get into the 4-hour charts, you have structure in which you can take trades off the 4-hour to 1 hour, and then you can refine your entries to the 15-minute, all within the idea that you know that these trend lines is creating powerful zones in the market. So I hope this blessed you. I pray, man, this like, subscribe, man. We got some beautiful content. I'm telling y'all, man, it's gonna be powerful. And I pray that this power of the trend line really blessed your life. I see y'all, man. God bless.
Look into its eyes. It sees what we can't.